Hello friends, welcome to Easy Learning Economics. I am Dr. Kaval. Today our topic is the components of national income, in which we discuss that the GDP stands for the gross domestic product, GNP gross national product, NNP net national product, NDP net domestic product, NI the national income, PI the personal income, the DI the disposable income, and GDP per capita income. We talk about all these components of the national income. Our lecture plan is based on that: what is GDP, what is GNP, what is NNP, what is GDP per capita income, what is nominal GDP and real GDP, what is NDP means net domestic product, what is national income, what is personal income, what is disposable income. So these things we are going to discuss one by one. What is GDP and who introduced the concept of GDP? The Simon Kuznets presented the concept of GDP in his report to Congress in 1937. What does GDP shows? What is the importance of GDP? What we understand from the GDP? GDP is a scorecard of the economy. It is the measure of national income, national output and national expenditure. Mathematically, we can express the GDP as the C plus G plus I plus NX. GDP means gross domestic product, and C stands for public and private consumption, G stands for the government outlays, I stands for the investment, and NX stands for the net export. It means the export minus import. Why we use the GDP? The GDP is commonly used to measure the market value of final goods and services produced in a country during a period of 1 year by resources located in the country, regardless of the ownership of resources. The GDP includes the goods produced in Pakistan by foreign firms, but exclude the goods produced overseas or abroad by Pakistan. Simply, GDP is the value of final product or finished goods which are ready for sale, produced within a country border either by citizens and non-citizens. What is GNP? GNP stands for the gross national product. It is the measurement of the annual economic productivity and wealth of a country, and it depicts the snapshot or the photo or picture of economic growth. Mathematically, we can express the GNP as GDP plus net factor income from abroad. GDP, as we know, that the money value of all finished goods and services produced in a country during a period of 1 year, plus net factor income from abroad. It means the income earned by Pakistani people residing abroad and producing there. They have the nationality of Pakistan, minus the income earned by the foreigner in Pakistan. It means the GNP is the money value of all finished goods and services produced by country's citizens during a period of 1 year, regardless of the location of production. Or simply, GNP is the value of final products produced by only country's citizens, both domestically and abroad. NNP. NNP stands for the net national product. It is the way to measure nation success in minimum production standard. It is the more accurate measure of final goods and services by country. Mathematically, the net national product we can explain that the GNP minus depreciation. Now question arises that what is depreciation? Depreciation is the value of fixed capital through wear and tear associated with its use in productive activities or portion of the capital used in the production of goods and services. Some of the machines might be repaired, outdated and out-fashioned. They must be removed. Depreciation is basically that cost of capital that is used during production process. The depreciation is the wear and tear of capital, and capital ages over time and loses its value. Other type of GDP is GDP per capita income. So what is GDP per capita income and how it is calculated? When GDP is divided by population is called GDP per capita. GDP per capita means the per head output or average per person output. GDP per capita is a simply measure of output per person or the amount of national income that each individual in the country receives. GDP per capita income shows annual improvement in the standard of living of the average citizen or resident of country. It is used to make cross comparison between the average living standard and economic well-being. What is nominal and real GDP? When total output is measured at current year price is called nominal GDP. So what is real GDP? When total output is measured at base year price is real GDP. Real GDP is inflation adjusted GDP. What is base year? So base year is a reference year with which other years are compared. When constructing an index, the index equals 100 in the base year. Is net domestic product, NDP. Net domestic product is a depreciation adjusted annual measure of economic output of nation. Mathematically, we can express the NDP as GDP minus depreciation. NDP shows the estimated value of country's amount of spending in order to maintain the current GDP. What is national income? National income is the total value of country's final output of all new goods and services produced in 1 year. It is the total factor income. National income is the sum of the income received by the resource owner in the form of rent, wages, interest and profit for the use of their resources in the production of goods and services. GDP is the measure of national income, national output and national expenditure. National income, mathematically we can say that GDP at factor cost. What is GDP at factor cost? How can we calculate the GDP at factor cost? We can calculate the GDP at factor cost, GDP minus indirect taxes plus subsidies. So what is personal income? So the personal income means the total income received by the individuals of country from all sources before direct taxes in 1 year. Through equations, we can say that personal income is equals to the salaries and wages received plus interest received plus rent received plus dividend received plus any transfer payment becomes personal income. We can find the personal income from national income through equation that personal income is equal to national income if we deduct the TC. TC means the corporate income tax. When we deduct the corporate income tax TC from national income, and PC means the internal expansion or undistributed corporate profit or retained earning, and the TS is the insurance or social security tax. When we deduct the corporate income tax TC, PC means the undistributed corporate profit or retained earning, insurance or social security tax from national income, and then we add the transfer payment. Transfer payment means that the gift or grant from the government for which no any exchange of goods is taken place or no any economic activity is performed. So it means the transfer payment means the old age benefit or retired pensions or income received but not earned. This is called transfer payment. So when we deduct by adding all these TC plus PC and TS, once they are added and they are deducted from national income, and by adding the transfer payment we get the personal income. The amount of national income received by the residents of country from employment, dividend, rent, wages, profit and transfer payment. That was the equation here. Personal income is equal to salaries, wages received, interest received, rent received plus dividend received and any transfer payments. Personal income includes the earned income, capital gain and amount of income from all types of activities. So what is personal disposable income? Personal disposable income means the final income that remains with individual after paying taxes towards the government, which individual can spend on the purchase of goods and services. It means the amount or income which remains in the hand of individual after paying off the taxes towards the government. This is called the personal disposable income. It means it is the after tax income of a person. It is found by deducting the tax and non-tax payments to the government from personal income. Through equations, the disposable income is equal to Y. It means this is the personal income. Y indicates for here the personal income. T stands for the taxes. Personal income minus taxes, or personal income minus direct taxes equals to the disposable income. It is all about the national income, GDP, GNP, NNP, and the NDP Net Domestic Product, and the nominal GDP and real GDP. I hope that it would be clear to all of you. If you have any query or suggestions, please let me know your feedback or any future request in comment box. I shall reply. So thanks for watching.